Hi there, and welcome to Economic Observations. My name is Chris. Today is Tuesday, the 19th of January, and thank you so much for being here. I really appreciate you. I had some technological glitches yesterday. I spent like 5 hours working on a video for you. I thought it was all ready to go. I had uploaded it to YouTube, and it said it was over an hour long. I said that is impossible. Went back, re-edited it. There was a little 1 second clip at the 1 hour mark. I deleted it, exported it, and well, in that time I uploaded the first video to the time I edited the second video, I deleted the file on the SD card. So when it exported again and I saved it as the same file, well, it was blank. Anyway, it was almost midnight. I was tired, and this is just a rookie mistake. I could not get the file back. I tried downloading so many recovery softwares and it just didn't work. Anyway, I'm only human. Anyway, my name is Chris and this is Economic Observations, and thank you so much for watching. This video is sponsored by the Tanzania School Foundation, a nonprofit near and dear to my heart. There are links in the description below should you want to learn more. If you would like to support this channel, please consider making a donation to the Tanzania School Foundation, and I would be more than thrilled with that. It is a tax-deductible 501c3. All right, let's get started. The big question that everyone is talking about in the economy, is it inflation or is it deflation? What's 2022 going to bring? Economists all over the world speculate on this question. Some of them say we are going into hyperinflation and the supply chain is never going to be fixed. And we are going to see prices skyrocket and the potential of the US dollar falling to the currency of Venezuela, or maybe the Turkish lira. On the other side of the spectrum, you have economists saying it is not inflation that we have to worry about, it is deflation. And today we're going to talk about the two. And what do you think 2022 brings? I have my own opinions, and we'll talk about them. Over the past decade, there has been so much money injected into the economy that it causes speculation and prices to rise and borrowing like we've never seen before. And when people and companies borrow, they borrow for future growth. So there's good inflation and, well, there's not so good inflation. There's demand pull inflation, and that's when prices rise because demand is so strong. Right? And you get everybody who wants to go out there and buy something, and the prices rise because, well, they just can't. The other is cost push inflation, and that's when you get rising prices, not because of higher demand, but because of supply shocks that screw up the economy, and that causes things to be more expensive. We're experiencing a little bit of both right now. We have demand pull inflation because people didn't open their wallets during the pandemic, right? They weren't traveling, they weren't going out to eat, they weren't going to theaters or sporting events or whatever. So the demand is high. So they're catching up now. They're spending the money that they kind of held on to in 2020. Now you have people who are freely spending again, and they're catching up, spending not just the money that they would today, but the money they didn't get to spend last year. And then with the Fed's monetary policy and the interest rates were kept at zero for way too long, that encouraged a lot of buying and a lot of borrowing. It also injected so much liquidity into the economy, which manifests itself as higher prices, higher asset prices, stock market, cryptos, etc., etc. On the supply chain right now, it's a disaster. Factories were closed in Asia, and many still are. We had a Samsung semiconductor factory in Japan burned down, and every ship is in the wrong place right now. Nothing is where it needs to be, which pushes prices up all along the supply chain. So demand pull, cost push merged together, the nastiest inflation that we've had in decades. But I don't think inflation is going to be a problem anymore. Some of the biggest corporations in the world are working very hard behind the scenes to fix that supply chain problem. Do you really think Amazon is going to change their motto to 2-day delivery? There is too much money on the line to not fix the supply chain problems. Amazon wants their next day delivery, and when they will do anything to make that happen. And believe me, the supply chain problems are going to resolve themselves somehow by some of the biggest companies in the world. And when this happens, we are going to have so much inventory and not enough demand. Interest rates are rising. The Fed is pulling back its stimulus, and they've kept it going for almost 2 years now, or more than 2 years. It's been going on since before 2009. It is no longer injecting $120 billion every month into the bond market. It's already scaled back to $80 billion, and it's expected to scale back to $30 billion. That's $90 billion less than we've had for the past 2 years. And when the Fed does this, there's going to be a tightening in the supply of money in our economy. All these demand forces are draining out of the system at the same time. So the supply chain is going to be fixed. You're going to have the Fed pull back on their bond purchases. We are going to see interest rates rising. And well, folks, I see the prices of things coming down. Now, who am I, right? I'm just another person out there giving their opinion. And we know that economists have been wrong all the time. And the jury is out on this. There are so many that think inflation is here to stay. And there are so many that feel like we are going into a deflationary period. So what happens, and is deflation good or bad? Well, a slight deflation could be unambiguously good. We have our dollars buy more things, right? If the price comes down on things, we can buy more, and it appears to be a good thing. But if you take a look at the bigger picture, when we buy things at cheaper prices, that means companies aren't earning as much money. It's not to say that we're going to buy 5 times as many of the things that we would have if the price was higher. We're still going to buy one, and we're only going to fill up our gas tank once. But companies are going to earn less money because their items for sale or the services or the goods that they produce aren't going to reap them the rewards that they have when the prices were high. So what is that going to do for corporations? Well, it creates a lot of unemployment, and people will lose their jobs, right? Because that's the first thing to go when earnings are down. It's also going to have a huge impact in the stock market, especially on these stocks that were projected for future earnings, right? So you got like Peloton and Lululemon and so many of these other growth stocks that the price of the stock isn't valued at what the company's worth today. It's what their future earnings could be. And let's face it, really, Peloton, do they really think they are going to have a more successful year than they did in 2020 when everybody was home? I can't see them going anywhere. And Lululemon, well, how many yoga pants can one person own at $100 a piece? My prediction for both of them, they are going to go in the way of Alex and Ani. And you can do some research, and those bangle bracelets are just not that popular anymore. Anyway, you get my drift. So I think that a lot of companies who are over indebted with future growth and speculation, well, they're not going to do so well in a deflationary period. Because also if their prices are low, not only are they going to lay off staff, is they're not going to be able to pay back their debt. And that has a bigger problem because they've borrowed so much money, anticipating that growth will go on forever and ever. And in deflationary period, it scales back. Growth is not unambiguous, right? It doesn't go on forever. And those are the companies that we'll see. And a lot of investors will pull back out of these stocks and go more into a value stock that has fundamentals that warrant the price that it is and pay a dividend, are much more stable. We're going to see a lot of problems with that. But the other problem with deflation is that it can spiral out of control. And deflation can lead to more deflation, which can lead to more deflation. And in that scenario, well, it's not so good. Sometimes during a deflationary period, what the Fed can do is lower interest rates to try and balance things out again. And I think that's why the Fed, and even like Goldman Sachs and JP Morgan, where they say there's going to be not 3 interest rate hikes this year, there's going to be 4, 5, or 6. Well, because the Fed has to get interest rates to a point where if we do see a deflationary period, they may be able to lower the interest rate to increase demand. So it's really a tightrope, and the Fed has to raise interest rates at the perfect time, right? If they do it too early or if they do it too late, it can have severe consequences. This is all wait and see. We don't know when this is going to happen, but when that supply chain rectifies itself, you're going to start seeing things change a little bit. That's my opinion. Again, I'm just one of many that see it going that way, and there are hundreds of others that see it going the other way. You choose, do some research, look it up, and you come to your own conclusions, but that's just mine. Anyway, thank you so much for watching. These videos take quite a long time to record, edit, and upload. If you would like to support this channel, again, please make a donation to the Tanzania School Foundation. I would really appreciate it. Check out the artwork for sale. It's really beautiful. All right, with that, I appreciate you. Thanks for making it to the end. Call someone, tell them you love them. Be kind, folks. And we'll talk again real soon. Have a great night.